Hi guys, it's Mr. Bennett here. I just want to go through your investigation for this year for the loans and investment stuff. Now, you've got this assignment sheet. It looks fairly much the same as this. Now, keep in mind when you're doing an investigation, the key thing is that you have to show off that you understand the mathematics at a high level. And so this is only a guide, the information that we have here for what you need to try and do throughout your investigation. So it's okay for you to be able to just focus on a small area and go quite deep and do lots of what ifs, show an understanding. So it's the understanding that you show is a really important bit. Alright, so the analysis is really the key thing that you need to be able to do there. So what we've done with the investigation, we've broken into some ideas for you. Now we have said do part A, B and C as a minimum. Technically you don't have to do that, but I think it's a really good thing to do. So the first bit, really what you're doing is you're finding some information about you and what you're going to be doing in terms of your life. Okay, so set up a scenario about where you'd see yourself in the next 10 years in terms of what sort of job you got, what sort of money you're getting and how you're living. So you might put in there that you're married, you've got a partner who's also working. And then when you do your budget, it needs to be only a really small budget. And I'll show you the example which Mrs. Mitchell will have for you. Remembering part A is not necessarily the key thing, so you have to have an introduction talking about what you're doing. The scenario, very simply set out there. And then this is about how long it needs to be in terms of information. So you do have to include things like taxation, Medicare, and then you have your net income combined. Alright, and then simply with your expenses, I wouldn't go any more detailed than this because the investigation is not about doing a budget apart from just a very crude budget. So your rent, your car expenses, other expenses, and then what this will tell you is how much money you have available to save and also pay off your mortgage and put into things like super and so on. So then I'd go to somewhere like domain.com and get a picture of a house in a suburb that you want to live at. Right, so it just makes it look pretty. You're talking about where it is, the purchase price. Now, an understanding about buying real estate, because they're advertising at $605,000, doesn't mean that you'll pay that. So you might be able to negotiate. You get that for $580 or $570 or whatever. All right. So we talk about that understanding needs to come through. And then what you need to do is you need to save your deposit. So this is really part B of the investigation. So what we're doing there is we're looking at the size of the deposit that you're going to be able to save with the amount of money that you do have. Alright, so the ultimate obviously is a 20% deposit. That way you don't have to pay any mortgage insurance. So if your loan was $580,000, 5% of $580,000 is in fact $29,000. So that's how much money you have to have just for the deposit, and then you also have to pay fees on there as well. Alright, bank fees and government stamp duty and so on. Now, you can take the view of that you're a first homeowner. Alright, so if you're a first homeowner, there are certain conditions and benefits that you get, and you can talk about that in your investigation as well. Alright, so in terms of the amount of money that you can possibly lend, you can go to various bank sites and get that information. I'll just show you the ANZ one because that's I think quite a simple one to do. So if you come into the ANZ website, if you go to personal over here, and we're going to do home loans. Right, if you click over here, calculators and tools, then you can get how much money they will lend you. Alright, so you've got to answer some questions about what they'll do there. So if I click in there, you can follow the link through and put the information in there, and that will tell you how much money the bank will borrow or lend you. When you come down to filing the costs, if you come to this one here, let's just quickly do this very quickly for you. So let's say I have to tell them what I'm going to do. I'm going to purchase a property. Where is it located? Well, it's probably in South Australia. What's it going to be used for? It's my primary residence, and then it's going to be a principal and interest loan, so I'm actually going to pay it back eventually. And then you're going to say I'm going to borrow $580,000. That's how much the purchase price was, $580,000. let's say I want to borrow 400 of that. I'm going to save 180,000. Okay, so calculate that. Then what that will do, it will actually tell you what your fees are. Alright, so these are fees that you pay for anything. Obviously I'm not paying any stamp duty on that. So that tells me to complete the transaction estimate you'll need to contribute that much. Alright, so that will be an idea about all your fees plus your deposit that you're paying there. Alright, so what you can do with that is you can print screen that and then you can paste that into a document. I would suggest that you put this into your appendice, right? And then you can just crop that to make sure it looks good. So what you can do is you can look at some different conditions, change those around a bit, and then you can have that information you can put into a table. All right, and you can also talk about what those things are. What are those fees? Why do you pay those fees? All right, so it's about showing an understanding of all those sort of things. All right. So, in terms of, I'll go back to this, just a sample one I've done up for you. Right, so you've got to talk about, you know, while you're doing this, you've got to talk about the options and which bank's going to be the best bank for you under your circumstances. And obviously, when you're looking at your bank, you're looking at who's going to provide the best interest rate and all that sort of stuff. So what I've done here is in my spreadsheet, I've actually just typed that into my spreadsheet, and I've now got a breakdown of all the things that you might want to have. So for 5% deposit, what have I got here? This is my estimated charges that I have. That's a purchase price, the loan amount's that much, total expense is going to be this much. Right, my deposit's going to be 29,000. First home owner's grants, obviously I take that away. So if I'm going to pay a 5% deposit on that house, it's telling me I need 78,000. That's how much I need to save in terms of getting that ready. If I'm going to do a 10% deposit, it works out to be 95,000. 15% deposit, nearly 120, and about 140,000 for 20%. So the idea is explaining that once you've chosen the bank, only do it for one bank, but do your initial investigation for a number of banks to compare, and then you choose one of those banks. So again, you see I've actually made a discussion about that, and you're talking about what you can actually do. Right? So the idea is to say, I'm going to choose this one here because this is what I can afford, and so on. Now, another thing that could come into here might be when you're saving your deposit, you might include things like a lump sum. So you might say my parents have given me $30,000 or $50,000 towards the deposit. So how's that going to change my scenario? So you can look at the saving scenario for the idea of the saving your deposit with just saving yourself and then having a lump sum and how that might affect things. All right. So now looking at this scenario, this table 3. See, I'm keeping a tally and I'm presenting it this sort of way. The calculation of this table affects of changing the size of the fortnightly repayments. Okay, so again, this is telling me how much interest how much I can actually save. Amount paid, alright, so future value, this is how much I'm going to have at the end of it. So over a 2-year period making fortnightly payments at a 5.7% interest rate and all of that. Now, the key thing is I've actually done a spreadsheet up for you that you'll get a copy of. Alright, so the spreadsheet basically has a number of these calculations for you. So what you can do with this spreadsheet, a little bit like what you do on your calculator, is you can just copy all that. You could paste that down here, paste that with all the formulas, and then what you can do is you can change that. So if I wanted to say for 3 years, we'll talk about, you know, how much money you can save and so on. Okay, so you can change those to be fortnightly to you could do weekly. Right, so you can change these figures and they automatically change in the spreadsheet. So this spreadsheet allows you to work out how long it's going to take you to save a deposit. Alright, so we're indicating these things over here where they are in fact the things that you're inputting into the cell. Alright, so if I change my payment amount, let's say I change that to be $1,500 because I can afford that, then how much? Now if your spreadsheet does that, just means it's not wide enough. Okay, so that means that I'm going to better save that much. So I'm saving $15,000 a week. I'm going to be able to save that amount pretty quickly. Alright, so that's that first spreadsheet here. That's for saving your deposit. So when you've done that, all you do is you copy that and then you go into your Word document, and this would come up earlier, and you simply just paste that in there. Alright, and you'd have to just resize that so it fits in your page nicely. In terms of the next part of that, so you've saved your deposit, you're looking at all these different scenarios here. Right, so you pay more money and see how that it changes things. So you're eventually going to get down to a possible scenario here. Calculation of the 20% deposit. That's how much it's going to, you're going to have to make payments per month, per week for that. Okay, so that's your payment. You're going to need to have that sort of deposit. And then you're looking at other scenarios. Okay, so this is not possible because they can't pay $2,500 a month. Right? They only have that much money available. Okay, and then you're going to make a recommendation about what you think is going to be the best scenario for this. Right, so it's again showing off that you can do a whole range of calculations. So that's really part B, is actually doing. Notice I haven't actually put part B there. Alright, so now I'm going on to part C. Part C is looking at paying back the loan. So once you've decided what you're actually going to be doing, alright, then you can look at the repayments. So let's say after paying all my fees, paying my deposit and all that, I have a home loan for $464,000. Now, you need to maybe readjust your budget. Right? Your budget was, remember, you paid rent. Now you don't actually have to pay rent anymore. So that money that you paid for rent can now go to paying off your home loan. Alright, so if Mike and Leanne take the loan over 30 years, minimum fortnightly payments is going to be this. So I think you need to do that for the longest time, and that becomes the basis for all your other calculations from this. Alright, so if you do that, you could just do this on your calculator, or you could do this in the spreadsheet that I've actually got done for you. So that says that I have to make monthly payments or fortnightly payments for 30 years. Alright, this is the minimum I pay back is $1,300. The total repaid over 30 years is I'm going to make 780 payments of that much, which is 1.05 million. And so therefore the amount of interest I'm going to pay is 591,000. Now, if you start looking at this, right, so we can look at different scenarios here. So the first scenario may be that you are looking at increasing the amount you pay back per fortnight. So if I do that, it will tell me, the spreadsheet tells me how much I pay back, right, and then how much interest I pay. And so therefore for this first thing I can say, I'm actually saving myself 163,000, right, in that period of time. I'm also saving myself 7 years. Okay, so that's by paying an extra $150 a fortnight. If I pay an extra, or let's go up to $1,700, then I'm actually saving myself almost 13 bit years, and I'm actually saving myself nearly $300,000 worth of interest. Get the idea? So you're playing with different scenarios here. Now, obviously, that scenario there can only happen if you can afford to actually pay that. Right? So if you can't afford to pay that, then you can't do that. Now, again, going back to the spreadsheet, right, super savings, how long to pay off my loan. Right, this is the calculation there. Right, so that's done in terms of, so what you have to do with this one here is you need to change the little scenarios here. Right, so in terms of this, I would maybe change that to be, again, so I might change it to be 1,800. Not 18,000, 1,800. And then that works out what happens in terms of all these other things will change as you're doing it. And again, you cut and paste that back into your document. So it's about the understanding you're showing, not about doing necessarily the calculations. Alright? And when you have a look at your thing, you'll have a little red tabs here. I actually deleted them, unfortunately, and I'll put them back in there so you know which ones that you can actually change. Alright, so coming back into here, into just the sample. So this section, part C, is all about looking at how you can save yourself some money. So you can look at things like what would happen if I won some money or got an inheritance and I pay that off of my loan. How much money can I save that way? You could look at scenarios like, let's say, what's the maximum interest rate I could actually afford? So let's say interest rates went up. You'd be looking at that scenario. You'd be looking at how about if I want to pay it off in a certain period of time, how can I do that? What's the best way to do that? You could look at maybe someone losing their job, right? So, your budget changes. You could look at maybe you got a pay rise, okay? So all these little scenarios that you can make up that will hopefully show that you understand this. So this is about showing an understanding of how to do this. So if you did get $100,000, inheritance from someone, would you be better putting it into your house loan, or you'd be better putting it into your super? I don't know. That's the scenario sort of thing that you can look at. So remembering what we're aiming for here is we're aiming for when you retire, whatever age that might be, how are you going to have a nest egg that you're going to live off? Okay, so one thing that you probably want to do is own your home, right? So whether that happens quicker or sooner, that's up to you. But then you also have to look at the superannuation stuff, right? Possibly. That's what you might do. You might decide in your investigation you're only going to look at the home loan. Right? You might look in your investigation, you might only really look at the superannuation. So it's flexible for you to show off. It's about, like I said, it's about getting a concept of, I'm going to retire at some age, and I want to be able to be, self-reliant, so I can actually live a certain lifestyle. So how much money going to need to have when I retire? So you have to consider things like inflation on that. Right, so that's another thing that you would need to consider when you're looking at this scenario. So again, in this spreadsheet, you have things like saving super. This, by the way, is the same thing for really saving your deposit. Okay, but obviously you're looking at different amounts of money. How long will my super last? All right, so if you put the information here and change these values, you can look at how long your superannuation might last. How much superannuation will I need? So this is again another spreadsheet. So all these things here are things that you can use to actually do your superannuation. All right. So again, it's just about changing the factors, changing the conditions, and seeing how that actually affects the bottom line down here. All right. So again, you can format that spreadsheet and put that into your document as you go through. What do you need to do to get an A? To get an A, you really need to take the investigation beyond the scope that I've given, myself and Mrs. Mitchell given you in terms of the actual task. All right. So what we've provided you is only just a starting point, and so people who get an A actually go beyond that, and they show an understanding at a much higher level beyond that. Obviously, if you did, the routine stuff, you're going to be guaranteed of getting a C with a bit of analysis. Obviously, if you did that at a higher level and showed some independent thing, you're probably working at a B standard. But to really get an A and a high A, you really have to actually go beyond. And you've got to look at it and making it as realistic as possible. And that's why we're suggesting using the bank spreadsheets and the tools that they have, that they are, in fact, really important in terms of looking at how you would do this in real life. When you come down to, obviously I've got lots of spreadsheet stuff there, it's about how you analyse that. Okay, so this is something in interest saved in time. So you want to be able to say that I've saved myself, $300,000 and that. You can talk about, which is the best option. What would you do? What would you recommend? And all that sort of stuff. So if you look at this investigation, on which I'm sure you're going to get a copy of that, you can put extra things like things that you find about homeowners grant. Okay, so these things here you can put into an appendice. Okay, you see the bank, how much I can borrow, I put into appendice. Okay, so you can actually see all that. My application fees, from the bank site you can see the different amounts for different deposit sizes. Okay, and how that's what's being summarised in the table. So you use your tables to summarise the information that you collect from other things. Okay, I hope this helps you in terms of getting your head around what you need to do for an investigation. So it's got to read like it's got to flow. It's got to have the connection between one section and the other section. So example would be, if I put more money into my home loan, it means I can't put extra money into my superannuation. Right? If I have a balance where I'm doing both, then that maybe is a good thing. Maybe I'm better putting more money on my home loan, and then I can hit my super afterwards. You could talk about those little scenarios. Alright, so good luck with it. Make sure you ask for help if you need some help. And I would certainly highly recommend providing draft copies. Okay, so go through a little bit and then show us what you're doing. Right, and that way we can make sure that you're not going off on the wrong tangent. So good luck with it. Again, we're looking for a fairly major investigation, probably 3 to 4 weeks of work, probably looking at about 10 hours of really, really good, solid work into this thing. Remembering it counts for 10% of your marks for the whole year, so you do want to get a good mark in this if you can. Alright, so like I said, catch up with us if you need some help.